All right, hello guys. In this video, I'm going to show you three very simple ways you can start earning passive income in cryptocurrencies. All right, what exactly is passive income? It's actually income that you earn periodically, either daily, monthly, quarterly, or annually, right, without having to put in any manual effort. So essentially, it means having your money work for you. All right. So we work hard for our money. You work hard for your money. I work hard for my money. But how you get wealthy is actually getting your money to work hard for you. And with the advent of cryptocurrencies, you are able to do that in an amazing way. So I'm going to show you three ways to do that. So let's get right into the video. I'm going to share my screen now so I can show you. The first way is something we call mining. All right, and I mean this has been around for a long time. So for example, when Bitcoin was the first cryptocurrency to be created, and we need people to actually create these cryptocurrencies. All right, so individuals like you and I, engage in this process of mining. And just the way you mine your normal resources, minerals from the ground, from the earth, right, is the way you can mine cryptocurrencies. Okay, you are creating value on where value did not exist before. That's exactly what's happening. But so according to Google here, it says mining is the process of extracting useful minerals from the surface of the earth. All right. Exactly that same way, mining in cryptocurrency is the process of extracting cryptocurrency from the blockchain. All right. So how is mining done? Let me move here to Ethereum mining. So Ethereum is like the second largest or biggest cryptocurrency by market cap, and we have people that have committed themselves to actually create the cryptocurrency, to mine the cryptocurrency, and also validate the network. So it is these miners that get the reward, and what they do is they typically buy a hardware, either like we actually started mining with computers, and you can still mine with your computer, but the difficulty has increased, and also the competition is fierce, because mining is a process. It's a competition. It's called proof of work, as you can see here. Right? It says it's a process of creating a block of transactions to be added to the blockchain. All right, and Ethereum, like Bitcoin, uses a proof of work mechanism. The miners run their computers and run their software using their time and computing power to process transactions. So essentially, it's the battle of the strongest here. If you're using a weak computer, or your computer cannot compete with these other guys who have taken out, for example, look at these images here. People have taken out entire warehouses. There are thousands of acres of plots or square meters of mining farms and mining rigs. There are billion-dollar companies doing this particular activity. So it's a very fierce competition. It's not something I recommend for if you're just getting into it. But I mean, there are ways you can actually mine from your house. And so you can see, you can actually buy some. These are some home kits for mining here. You can actually buy this kit and put it in your home and start mining. All right. The downside to mining is that it takes a lot of energy. It can be loud. These devices are running, seriously. So they produce a lot of noise. So if you have a basement somewhere, you can actually start to mine. Now, if you just go onto YouTube, you'll see so many videos on how to start mining. And in fact, you can even actually mine on your phone or even on your laptop, even though it may not be very profitable, but you can just give it a try to see. All right, so that's the first way you can do that. You have to buy the hardware, plug it to electricity, and also plug it to the internet so that it can, participate in the mining effort, and then you get rewarded with the cryptocurrency. So that's a way of earning passive income. The second way I'm going to tell you is about lending. Now, this one doesn't require, it requires less effort from you, actually like a set and forget system. So just the way we have, the traditional finance market, we also have these services in cryptocurrencies called decentralized finance. All right. So you have some Bitcoin, you have some Ethereum, there are some platforms that allow you to, to store, right, your cryptocurrency on those platforms and give it to lending. And the company, lends other people who want to come and borrow crypto, and you get some interest. So you can see that it allows you to earn dividends ranging from 4 to 17% ROI. Now, this is something you may never be able to get in a bank. So lending in the crypto space is actually much better than keeping your money in the bank. Obviously, the risks are higher because your fund is only as safe as the platform on which you are lending. So most people like to put their funds in platforms that, bigger platforms that are more reputable, even though the return on investment may be lower than the newer platforms, which are more risky. All right, so that's why you can see it ranges from 4 to 17%, depending on the assets you're lending and also depending on the risk of their business model. So that's exactly what lending is. There are so many platforms, as you can see here. Celsius is one of the biggest ones in the US, only for US citizens, and it gives up to 17.78% yield. That's crazy. All right, for on non-US citizens or not for US, U holder actually does 12.7. And as I told you here, the way you compare these platforms is by the interest rate, depending on the coin you want to lend. Also, some of them allow you to lend for a fixed period and say, okay, it's 3 months, you can't touch the money. And some you can actually put the money and take it out anytime you want. Again, the rates will vary depending on this factors. All right, so these are the deposit limits, right? The collateral, how much collateral borrowers need to put down to be able to lend. All these things affect the ROI you get, the fees and the platform risk and the track record. So you can see here, if I scroll down, yeah, you can see there are so many platforms where you can lend money or even borrow, right? You can use your crypto as collateral, and sometimes you can borrow up to 50% or 100% sometimes of your stake. All right, so these are so many platforms where you can lend. So you just need to go online, say I want to lend crypto, go to Celsius, go to BlockFi is another big one. Even though their APY, their average percentage yield is lower than Celsius. And again, these figures may change, but that's there you have it. So most people try to gravitate towards exchanges, crypto exchanges, where you can access a number of services or tools to make money, and you can do that easily. So, for example, Binance is the biggest exchange by capitalization in the space, and you can see they actually have a section called under finance, Binance Earn. All right, they have Binance Earn, and Binance Earn you can actually stake your money to lend. All right, so you can see, as I said, there's a duration, there's an average percentage yield. So this is Binance Coin, and if you stake Binance Coin here, you're getting 9.21%. If you stake Ethereum 2.0, it's 4.9 to 21. So it actually varies. All right, you see, it's adjusted daily based on the activities on the network. Again, the downside to some of these things here is that the amount there's a minimum deposit that is required. So for Ethereum 2.0, the minimum deposit is 32 ETH. 32 ETH is crazy. That's probably going to about almost $60,000. All right, almost $60,000, and that's the minimum. You have to do minimum of 32, and it's locked for a period. I think it's a year or so, and then you can get this amount. So these are things you can get on. If you already have a Binance account, you can access these services. And if you want to open a Binance account, use my link in the description. It helps the channel grow. Yeah, so instead of just holding your crypto in your wallet, you can actually come to these platforms and stake, those that crypto you have and get extra yield. So these are guaranteed yields. You can see they have more, probably higher risk, higher yield, using their swaps and liquidity pools. Those are other things you can do. You can see here it says if you stake in this liquidity pool, it's almost 50% yield, but you're earning it in Binance coin. So there are factors that you have to consider. The risk here is higher because these are smaller coins, and they're subject to higher volatility. All right. So the next thing I'm going to tell you about is minting. So minting is more like the eco-friendly version of mining, and essentially is the process of creating a new token. So, for example, the way we were mining, right, is just the same way we are minting, but mining is done with hardware and minting is done with software. So minting is like mining 2.0. It's like the eco-friendly version of mining, right? Because we still need people to create these cryptocurrencies. Just like we have the paper mint, right? For your fiat currencies, we also have, the minters in cryptocurrency, and you can be a part of that. I'm actually heavily into this particular one, and that's what I recommend for most people coming in. All right. So instead of mandating this role to central authorities in cryptocurrencies, we are all for decentralization, and we need a lot of people to come into these activities to actually strengthen the network. So that's one of the um, core pillars of cryptocurrencies. Okay, so it says that I saw some things here I wanted to share. Okay, so I think I've touched on that already. Yeah, so this is it. It says ideally, crypto eliminates centralization by allowing users to introduce new assets into the ecosystem. So centralization is the key word. That's a very pivotal part of blockchain and cryptocurrencies. So you can actually position yourself as one of the validators on the network, as one of the minters on the network, so that and you can earn um, passive income that way. All right, and again, passive income depends on the blockchain you're doing this, depends on the network you're doing this, and also depends on how much money you have to to participate in this. But with maintain, there are some particular blockchains that allow you to get as high as 30% yield per year for the next 10 years. That is crazy, but it's happening in cryptocurrency. So how do you mint? It's the process called staking. So instead of buying a hardware, you're going to have to buy a license, so to speak. You're going to take some of your money and you're going to freeze it on the network. The closest thing to this is like fixed deposits, where you are going to, take some money, it's in your account, but you're going to say, I'm freezing this money. I'm not going to have access to it for the next 3 months, 6 months, 12 months, 36 months, depending on the tenure of that staking process. All right. So you actually hold the money in your wallet, and by doing that, you are providing liquidity for the blockchain. You are supporting the blockchain's functionality. So when you lock those tokens there, you get rewarded with new currency, that did not exist before, basically. So that's it. You become an important part of the network security because you are acting as a validator. So that's staking. And for most platforms, staking is offered in the form of interest paid to the holder. So for most platforms, just like the banks, you put your money there, whether it's lending, you stake the money, and then they use it for, especially these DeFi lending platforms, they lend it to other people and give you interest, right? But I'm saving the best for the last because it's one thing for you to stake your money and get interest. There's an element of risk there because it depends on the response of the people that borrowed, right? So you have, loans can go bad and things like that. Even the platforms can go into problems in terms of liquidity and all that, right? But there are other blockchains that allow you to actually stake and participate in minting, right? So I've told you about minting before. So you can actually stake coins. And let me move closer a bit here so you get what I'm saying. You can stake coins and still mint at the same time. So it's an innovative blockchain I found, and I've been staking on this blockchain for the last 6 months. even though I've been watching them for like 4 years. Okay, and the name of that project is Platincoin. It's a Platincoin blockchain, and essentially Platincoin is a stable coin. All right, so we have things that are called stable coins. They are not volatile. For example, Bitcoin can go 10%, 20% in one day, and most coins are subject to demand and supply. But when a lot of investors, me inclusive, would prefer to keep the bulk of our money in stable coins that are not volatile. So stable coins are actually digital currencies that are linked to an underlying asset. So they are pegged to an underlying asset, such as a currency, natural currency, or a precious metal. So because they are pegged to something stable, right, they are able to manage their price swings that you see in Bitcoin. So that's the function of stable coins. And we have Tether, USDC, DAI, we have a number of them. And Platincoin is one of the stable coins I found, and they did something very interesting. They're actually pegging their currency, the price, to the number of validators or active users of the blockchain. All right. So while the price is stable, it's not static. So they solve the problem of market volatility by pegging the price not to demand and supply, but to the active user base of the community. I think right now there are about 700,000 active users. So this way, and I'm going to circle back so you understand why I'm showing this to you. In 2017, when I first heard about this blockchain, there were 10,000 users and the price was 10 cents. When it got to 100,000 users, the price went to €1 and it increased. It is called a stable ladder model. So it's an innovation in blockchain technology, actually patented by Platincoin. And right now, they are about 700,000. So they've crossed 500,000 users and the price is actually stable at €5. By the time the network gets to 1 million users, it moves to €10 per coin. So are you thinking what I'm thinking here? If you are staking on this network and you are minting new coins every month, right? Each coin is getting more valuable over time. But you can predict this because it's not swinging up and down. You're actually it's going step by step. It's pre-programmed into the algorithm, and that's just amazing. So I am staking on Platincoin, and Platincoin allows you to get about 30% per year on your stake. So if you're staking, say $10,000, by doing that, they give you a license to mint. So you freeze it in your wallet, and you actually generate 2.5% per month, right, for the next 10 years. So this is a patented innovation in crypto, and it's never existed before. And I've been doing this for the last 6 months, going to 7 months now, right on my smartphone. Okay, I might probably show this to you on the screen somewhere at the right, but the money is in my wallet, but I'm earning 2.5% per month for the next 10 years, right? and I can stake as much as I want, and I can earn that passive income. So these are the 3 major rules I wanted to tell you about. One is mining, we have lending, and then we have minting. All right, but I ended by telling you that you can actually stake on Platincoin blockchain. All right, that's one of the important things. If you go to If you are interested in learning more about Platincoin, how to stake on Platincoin blockchain, check the link in the description, or maybe the video may pop up somewhere, on the right here. Check the link and what I did a full video. I've actually done a number of videos on Platincoin and why I'm super bullish on this particular project. The founder is one of the top 10 most prominent figures in cryptocurrency, Alex Reinhardt, and they're doing amazing things. So this is the blockchain. And you can see right here that this yellow icon is actually minting. These are people this is a full live blockchain. So you can see 7 seconds ago, 298 Platincoins. One Platincoin is 5 euros. So right now that's about 1,500 euros right there. Somebody just minted with their smartphone. All right, so this gets me very excited. You can see another minting here. The blue icons are just transactions, either wallet to wallet transfers. Platincoin is doing a lot of things. If you want to know all about that, check the link in the description. All right, so thank you so much for watching my video. Definitely give it a like so that YouTube can show this to more people who are trying to earn passive income in cryptocurrencies. If you have any question,